Okay, so good evening. Good evening. It's Sunday, 7:05 p.m., and we're about to break down the markets as we always do the day before the trading day opens. Sorry, the day before the trading week opens. Um, for those who are deep thinkers, they'll be like, but the trading day opens on Sunday. So what are you saying? Are you saying blah blah blah? Yes, I'm saying I've marked Monday as the day I start looking at the charts. I've marked Monday. So personally, if it's not Monday, I don't start looking at the charts. I just do the Sunday recording to, get familiar with the charts, get familiar with where price action is trying to lead us to, and also um, what we have to look out for. So going forward, I wanted to say this earlier, but if you are watching the video and you still hear, sound blockages, or you don't hear my voice well, please, first thing you should do is type in the comment section or type in the WhatsApp group chat or enter my DM, which should be your last option, because squad could text me. We like, if let's say 15 people. Okay, let me reduce the number because not many people watch. Let's say 7 people are coming to see uh, this one. The audio is not clear like that. Wow, then that means the messages are for reply already. It's not a problem, but texting is sometimes burdensome to me because I'm not someone who talks like that, Wow, and I'm not someone who wants to be on my phone all the time. So it's very difficult for me to. Anyway, enough about that. So last week did something very, very wonderful. In my books, it was very, very wonderful. And please, going forward, if you can't hear the audio, just write it in the comment section, Yuba, and post them. So see, because I check my YouTube page a lot, my creator page a lot, so I'm able to see comments faster. Same Same happened last week. Last week I saw it on YouTube comment section before I came to see the personal chats and the calls. So yes, I'm trying to get my community to be active on the YouTube channel. Okay, so let me remove all these things and let me explain them before I remove them. This one was to indicate a liquidity sweep, and the reason why a range is there is because now that this liquidity has been swept, there's only going to exist two liquidities from here to wherever the market is now, and that's buy side liquidity and sell side liquidity, which is in fact the only two types of liquidities that exist. I know people will talk about internal range, external range, inducement, and all those things, but it's still at an old high or below an old low. So summing all up, it's still buy side and sell side liquidity. You get it. So let me get this out. And this one too, this indicates liquidity taking because this week's candle could not go past this week's candle. This happened on the open. The impulsive move higher happened on the open, you see. So you can tell by that there was a lot of liquidity resting above these highs because there's going to be more resting here and more resting here, you see. So took out this liquidity. I forgot to indicate it as an X, you see, because I indicate it as an X when it is taken out and it has been taken out. So I get rid of it. Then I'll come back to the weekly time frame, but let's solve this for now. This liquidity to taking out. Okay, I'm going to leave this here because immediately I opened it, it taught me something. Just by looking at it, it gave me an idea of what could be. and gave me a deep look into a mistake I did, or a mistake I made. Sorry, not did. A mistake I made the past week. Okay, so I'm going to clear this. This was a move down to mitigate the orders in this order block. In this order block, so after these orders go mitigated, you could see that there was sharp rejection from this level going higher. That means it's taking a bullish turn. You understand? So clear this too, and then clear this too. I'll leave this here because this is my projection that gold will get to 6,000. You see, gold will get to 6,000. So I'll leave this here, and then we'll focus more over here. The point of removing the other um uh, trend lines and lines is to create a focus for us to look at. You get it? So just by keeping your focus on a certain range in price, you'll be able to determine a bias early and then stay in that bias for the week. So over here we can see that price has come down, taking out this liquidity, and then we can see a line over here. So this is what we have now. Should we choose to stay on the weekly time frame? Just by looking at this, you can tell that there was a certain form of resistance here. How would you be able to tell? Because I can see by the wicks. So you see the wicks are indicating that there was um okay, for lack of word, I'm still going to use the word I didn't want to use because I wanted to see there was a struggle. You know, entering into the forex market, you used to tell us that there's always a struggle between buyers and sellers. So when you see a candle that is flat, it's because buyers and sellers were struggling in that particular. I've grown to understand that it was just a way people wanted to use to describe the market and the evolution, the evolutionary belief I've come to have of something like that is that there are a lot of others in that specific level in price. So when it gets there, market tends to range because they are picking up or they are piling up orders. And then when they are ready, they'll sweep liquidity in the opposing direction and then go to their real direction. That is what I've come to believe. So something as this, you'd see that the candle was ranging. If you go on the lower time frame, you get it. You see that it had bearish candles. This is a weekly candle, by the way. So if you see this small retracement, you can tell that on the smaller time frames there are a lot of bearish candles just from this move. Let me see how many pips is that. 1,200 pips. That can be one big red candle. You get it? Let me DND before this boy call me and interrupt the network. You see, so yes, this is it, and you can see that there's a lot of resistance. So that should give you a hint as to why the line is here. Now let's go down and really find out why the line is there. So remember, this is our focus, right? Now the line is here because when this impulsive move upwards happened, right? When it happened, it started coming down. Then it showed signs of wanting to go back up. But you can see that when it got here, it reversed. Do you understand? When it got here, it didn't continue its run up. It came back down. Do you get it? Um this move or this behavior in price is what we call there is a resistance at the high point of the price, or there's a resistance at the high point in the market, which high point will mean this point because it's at this level that price was reversed. So there's a resistance at the high point in market, which is this level that is resisting price from going up. You see, so when it comes back down and takes out this liquidity, remember, anytime there's a liquidity sweep, it indicates to us that there is a new move happening in the market. Most times after a liquidity, immediately after a liquidity sweep, there's a switch. 4878.72. So anytime there's a liquidity sweep, it means price is ready to go. 4878. You see, anytime there's a liquidity sweep, it means price just came down to grab the money over here and then deliver it to those informed who know how to place trades with their money. You see, so it came down, swept this liquidity, and then immediately swept the liquidity. Look what it did. It broke above this high with impulsiveness, with force. It went up, boom. You see, boom. So we come back and then we put a line here and mark this place as the resistance. We can mark this whole session as the resistance. But you see, I thought something weeks ago. I thought something weeks ago. That's something like this. Something like this is what we term as a bullish order block. Is the bearish close candles before an impulsive bullish move upwards. That is what the bullish order block is. So you can see down, down, right? Liquidity sweep, then boom upwards. You can see that, right? And what happened after that? It came back down, came to fill this order block, fill more orders in this order block. You see, entered this fair value gap, came down, came into this order block, and then what happened? You can see a rejection up again. So if you've not studied the order block, I thought weeks and weeks and weeks ago, please, you should go back to it, because this is an IPDA entry. You understand? Right from a consolidation, right from a consolidation, right from a consolidation. Where do we see the 50% level? Where do we see it? We see it here. And where do we see the order block formation? At or around the 50% level. This is the order block formation. And look what happened. Boom. It went straight up. It was not looking for any other thing. Straight up. Okay. So another entry method I was using was the optimal trade entry method, where I think I thought about it in my previous lesson, and it is the equilibrium to discount to premium levels. You see, so for something like this, if we have an impulsive move in price, we wait for price to come back down to the discount. You see, the for a good, in fact, the best example, the Ghana jersey, right? When we saw people demand more of the Ghana jersey, what happened? The price increased. You understand? It increased. After, I'm sure by April, the price will come back down to an affordable level. You understand? That's price coming back down to either equilibrium or discount. If price comes to equilibrium and still nobody is buying, equilibrium means that the level at which people agree, the level at which both the seller and the buyer agree to trade at, that's equilibrium. You understand? So if price comes back to equilibrium and people are not buying, that's when price reduces again. It goes to discount. You understand? Discount is when maybe people have seen that, oh, the Ghana Jersey crab one squad gets, so even if I buy it, to not mean anything. You understand? It has become irrelevant to people, so the sellers will be forced to reduce their price. That's what we call a discount. You see, so price went up, 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 up. People were buying. People were buying. Even at this place, people were buying. You understand? But the informed knows that anytime there's an impulsive move upwards, there has to be a retracement to either equilibrium or discount. You understand? So it comes back down to discount, right? There's less demand at this point. There's more demand at this point. Sorry, at 50%. either 50% and below. So you can see that when price came to 50%, it didn't stay there. It went deep, came all the way to 70% of the move from here to here. You understand? And what happened after that? You start seeing a sharp rejection, a sharp rejection. What exists over there to boom, the order block, as I mentioned earlier. So you see, this is a sorry. This is a good. This is one of the best confirmations you would want to have as a trader. You understand? So yes, the order block came, optimal trade entry into a discount level. You can take your entry from there and not worry about anything. You understand? So yes. Now let's go on the 4-hour time frame. Having talked about this, I'm going to do something that will favor everyone that watches this. I'm now going to put a new range here because I don't believe price is going to come back down to take out that level. So you see, I'm going to leave the new range here to help those who are new to technical analysis. So the range being here, or the range, me leaving the range here, is to tell you that now this is our focus from this level up until this level. We are looking for buy side liquidity. So anything above the market is what we target. So liquidity resting points here, here, and then the borrow one. That's the high point. You understand? Also here and here, but you know, they are minimal, they are menial. Let's go on the 1-hour time frame and see if we find more liquidity resting points. So anything above the market is what we chase. You see something is here too. So previous highs is what we are going to be looking at. You see something here too. I'll get rid of that one. So yes, what happened? What happened? What happened? What happened? So Monday I took a trade and then I lost on that trade because I was expecting price to, you know, run back up after coming into this fair value gap. And then for those who are in the WhatsApp community group chat, you would see that a friend corrected me. You understand? A friend corrected me and told me he sees an SMT divergence, and I'll teach about that soon. SMT divergence is when a correlated pair is failing to make lower lows on the pair as the current pair is making lower lows. You understand? So maybe a lower low happened here and then the correlated pair doesn't make a lower low. That's an indication that there's something not tallying in the market. That means that it's not going to continue going low. It's going to change direction and go up. Do you understand? So it's a correlated pair that will give you an indication. And then SMT is not part of my checklist, so I was trading based off of what my analysis have already done. You understand? And then I was going. He gave me the signal that he believes SMT has happened and then it's going to change direction. And I was like, okay, I've heard him. I'll keep an eye out, which I did keep an eye out. And then eventually the unfortunate happened to me. But then I stood my ground because it's my analysis, you understand. I take the fall for it. What if one day he doesn't correct me? You understand? That means I'll be blind to sorry, what if one day he's not there to correct me? You understand? That means I'll be waiting for someone to correct me and say, this your analysis is wrong, add this, add that. But having given me the having given me the hint, I kept an eye out and then I saw. So Monday, a deeper understanding of SMT happened to me. Sorry, a deeper understanding of SMT came to me, and then it even made me spot SMT divergence at this level. If you go on silver and you check silver, oh, silver is even here. You see, at this level, you can see that SMT happened here. A lower low was swept over here, and then a low was swept over here, and then a lower low formed. But you can see on this chart that a lower low didn't form. You get it? So all this was just a fake out to make you think. Even these heavy candles was to make you think price is going to keep coming down. And you can see in my analysis that I drew a level here, and then I was waiting for price to tap into this level and then sell all the way down here. But guess what? Price didn't do that. Do you understand? All because of the SMT divergence. So I've added it to my checklist. If I'm going to continue trading gold, I've added it to my checklist just so that I'm very armed and dangerous. Armed and dangerous. You understand? So what's going to happen in gold? I believe as the Sunday open always does, it comes with a lot of explosion. And having seen the previous week's candle close to the highest point it could reach, my analysis is that it's going to just boom from here. Maybe take out these highs and then retrace, get into the landing session, and do its thing. Landing session will paste another high, retrace, New York session, and then do its thing. New York session to paste another high, and then landing close to may come down, maybe take out this low. If it doesn't take out the low, then maybe by the Asian session of the next day, come all the way, take out this low. That'll be Tuesday, and then go back up, take out this high, and possibly create an all-time high. With all the war stories going on, this is what I think is going to happen on gold. You understand? So yes, if possible, you can screenshot this and then use to aid your analysis. Now, someone texted me and told me that they followed my analysis and then they got, they got it wrong and they lost some money. The thing about analysis is that it's supposed to give you a general view of what the week is going to do. It's not supposed to, it's not supposed to tell you, yes, say. For those who don't understand, tree, do this, do that, do this, do that. You understand? The analysis is supposed to give you a direction in which you should speculate for the week. You understand? So you don't just hear me say, okay, my analysis is giving or is indicating a buy. So guess what? When Sunday opens or when Monday opens, I'm just going to place a buy. It doesn't work like that. You understand? So having considered that I may be doing the YouTube posts, you see the one where you can post like on Instagram or maybe Snapchat, you understand? And be giving updates. The market has done this, so I'm expecting this. I'm not going to be consistent in the beginning. As for that one, I can promise you, because I believe like people should be able to do their own analysis. But me, the fact that I know how to do analysis doesn't mean everybody knows how to. So I must be, willing to help anyone who is out there who doesn't really know how to do the analysis and will need extra assistance. So I can't promise consistency now, but as for updates, I can promise you that. Having said all this on gold, let's go to the next one, which is BTC. So for Bitcoin, I didn't do analysis on Bitcoin for the whole week. I just did I just did this line. I just did this line, and then what's the purpose of this line? The purpose of this line was to highlight a liquidity resting point, and as you can see, liquidity has been swept. Liquidity has been swept, and we can see the market clearly, visibly tanking. You understand? Not thanking as in thank God, like it's tanking in the sense that it's going down. So we have our first delivery of liquidity. Um, first, first, we have our first manipulation and distribution of liquidity. Then we have another accumulation over here, manipulation and distribution. And we attempted to see a third one because I marked this level because there was liquidity resting point on the lower time frame. But if you look on the higher time frame, that's a weekly. Look what rests here. That's a fair value gap, in case you don't know what it is. Anytime price comes into a fair value gap, it shows or it indicates that it's in a mode of rebalancing. It's trying to rebalance price for price to be fair. Understand? For there to be fair valuation for both buyers and sellers to be able to participate in the market. You understand? Equally. So on the daily, after it came down, after it entered this level, what can we see? After sweeping this buy side liquidity, what can we see? Now, going on the lower time frame is giving me an indication that this is a what? This is a bullish order block that price wants to tap inside and then what, continue going upwards. But let's check the 4 hour time frame. Okay, I'm not seeing any clear indication. So what I'll be looking out for is that price should break a significant low on either the 4 hour time frame or the daily. You understand? So a low such as this, it should break it with fat candles so that I'll see that okay, price is really, really serious about going down. Or else it can just channel from here, boom, upwards and then continue going up. But my primary bias, you understand, my primary bias is that it's going to be bearish, maybe up to this level or take out this low. In fact, you understand. But for me to, for that bias to be confirmed, I would have to wait for more um clues. I would have to wait for price to give me more clues and on what it wants to do. You understand? So my primary bias is bearish. I want to see price go bearish up onto this level, down onto this level, sorry. 6,004 down onto that level. But I'm not sure. I would wait for more clues because right now I can see um heavy candles, but I cannot see that they've confidently broken below a low. Over here broke below this low, but I don't really trust this candle. Like, okay, so on the 4 hour time frame we can trust it small, and you can see a retracement into this other block. You see, if you come to understand the institutional way of price delivery, you would be ahead of most because uh it gives you precise points where price will get to and then reverse from those points. You get it? So order block, and then I'm tempted to say it's going to continue coming down, but for the people who listen and then take decisions because I said it, I'm going to put a block in by saying I'm not very sure. I'm going to look for, more clues in price. But left to me, right? I'm just looking for Bitcoin to sink all the way down to this level, 6,004. But I'll wait for more clues. Let's check XAGUSD. XAGUSD is becoming one of my favorite pairs. Yes, this price analysis hit take profit, so I don't see the need of it again. Yes, yes. So let's go on the weekly. Let's start from the weekly. And because XA, XAUUSD was bullish, I'm sure everybody is just going to draw the conclusion and even help me say it. I'm also expecting bullish price movements on XAGUSD. So marking out the range. This and this is the range. These are focus points. Price has not broken above that yet. So that's what we'll be focusing on. You can see for XAGUSD too that price came all the way down, touched the wick of this order block, and then started showing signs of wanting to go up. So this becomes a new range. Then what happens? This candle close near the highest point it could reach in that day. And then look at what happened here too. Liquidity has not been swept below this candle, you see. And then I'm going to show you something right now. There's something we call swing formations or swing patterns, you understand? This is a swing low, a candle that has two lower highs next to it. You understand? Swing low. This candle, the middle candle, uh, a candle that has two lower highs to the left and right side of it. So this candle, the middle candle, is lower than this candle and this candle. That means it's a swing low. You understand? It's likely to hold. That's what we call it. And since price has not gone below this low, and price is always looking for liquidity, we are going to put our liquidity targets here. You see, so price is going to fetch for this level. That is, wait, I'll mention those levels. Yes, price is going to fetch for 86.819. And also 85.539. So the Sunday open is likely going to expand above this high and also take out this high. And maybe Sunday can get very, very energetic. So maybe take out this high too. But until that happens, this candle is in the range of Thursday's candle and it has not gone above or below it. And this is a swing candle pattern. You understand? So if you are looking for buy, or if you have a bullish bias, we are going to be targeting the highs of previous candles. You get it? So this high inclusive, this one, this one, this one, and then this one. You understand? So that's all for silver. I still have a bullish bias on silver and gold. Yes, 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 yes. Okay, so expand from here upwards. Euro USD, no, I don't do Euro USD. Another XAG, US 30, no, I don't do US 30. Uh, I don't do these ones because I don't want to cloud my judgments. Most of these pairs have a correlated way of movement. So if you don't watch them well, you are later going to get paralyzed. You will not take a trade because you've seen a certain correlated pair behave in a certain way, and then you think the trade you are going to take is going to move that same way, but then it ends up doing something else, and then that's a missed opportunity. You get it? So for those that I do not trade, I'm going to carefully get rid of them. I mostly need Euro USD because GBP USD sometimes, sometimes it's hard for me to break down. You get it? So sometimes I need a Euro USD, but apart from that, I don't need the Euro USD. That's why you see it there. Okay. US 30. I don't do US 30. So US 30. Hmm. I don't do it, but I think it's going to go down because these candles are heavy. That's market, and this is a weekly time frame, by the way. That's market makers telling you that they are ready to tank this market. Maybe to this level to take out this low or this low, or this low, and tap into this other block. We don't know, but we can just speculate for now. Or maybe come all the way here because here is now a resistance. You get it? So yes, maybe come all the way here. Maybe. But yeah, don't do US 30. So straight to GBP USD. GBP USD took out liquidity. This is what I've been forecasting for the past 2 weeks. Um, Prior to past 2 weeks, I was finding difficult to find a level for GBP USD to get to because it was giving me, mixed signals. You get it? It got here and then made an impulsive move upwards, but then it came back down again. So having cleared this liquidity point, right? Having cleared this liquidity point, I am now confident to say that I'm looking for buys on GBP USD. Oh, and you can even see from the daily time frame that this candle, as for this, even this candle, as for this candle, is active and is ready, very, very active. You see where it came all the way down to. Swept this liquidity, other block. Look at where this other block to go formed at. Look over here. This is a good level of what support. This other block formed at this level of support, and look at it, came all the way down, serve this liquidity, serve this one, and then what, enter this fair value gap, touch this other block, and look, signs of wanting to go up. So yes, for GBPUSD too, I'm looking for higher prices, and it should continue going up from here, since this candle also closed very near this candle was near the highest point it could reach in that day before closing. Sunday open is just going to expand above, Monday to expand, maybe Tuesday a retracement, Tuesday or Wednesday a retracement, and then a continuous expansion above. You guess what I'm trying to say? So these are the things I'm looking out for the week ahead. And then for my community, so sorry I've not been able to hold sessions of late, and it's because I've had tests and exams. Sorry, exams I've had to write, join some group meetings, and then I'm now restructuring my time again to, find a day where I can be teaching consistently. You see, so I'll make it up to you. I'll deliver fire contents, by the way, contents that will open your eyes about the markets. Until then, we'll meet next week, or maybe within the week, because I'm planning on launching uploading another video. That'll be all for today, and I hope this market analysis helped you, because today there I filled it with a lot of things. I went to order block, institutional delivery, um, impulsive moves, swing lows, SMT divergence. Actually, I pack 'em. So listen to it, let it aid your analysis, and then you can give me a feedback if possible. Also, when you do your analysis, you can send them to me, so that I give you my idea, or I give you my perspective on what's going to happen to price. Then move on from there. See you next week. Bye.